Hello guys, Marco Schwartz here, and in this video I want to tell you how I actually choose my assets that are part of my investing portfolio. So as you might know, I invest in three different types of assets in my portfolio. The first one is dividend paying stocks, the second one is real estate crowdfunding, and the last one is peer-to-peer lending. So people have asked me, how did I actually came up with this allocation and why do I invest in those type of assets? Well, I actually spent a lot of time thinking about all of this because I lost a lot of money when I was younger, like when I was 20, I lost a lot of money in the stock market. So I invested a lot in the stock market just in the hope that the stocks I would invest in will grow and that I would sell them at the right time. But this, as we all know, probably you tried it as well, it doesn't work so much if you are not a professional trader. So instead of that, I decided to actually think about it before building a portfolio as it is now and really take time to decide what I want in my portfolio. And this is what I will tell you now in this video. So basically, I came up with 4 different criteria that I use to select all the assets that are in my portfolio. So criteria number 1 was really to have assets that are generating income. So basically, you invest in something and it gives you back income, for example, every month, every 3 months, every year, but it gives you back the income in some way. So this is actually something that's very controversial over the internet because people would say that if you have assets that generate income, you will get more taxed, and this is somehow true. However, it's also that you actually get to enjoy your income. You actually get to enjoy the investments that you are making before retiring, before you have to sell it. And therefore, that was my first criteria because I want to invest in assets that will actually pay my bills now, not in 20 years from now, but right now. I want those assets, I want those investments to pay my bills and to pay for my lifestyle. Criteria number 2 was that these investments are 100% passive. That's also very important because as an online entrepreneur, I'm very busy. I have a lot of things to do and I don't have the time to take care of my investments, for example, to trade on the stock market. So I wanted everything to be 100% passive. And that's the case for dividend paying stocks, for example, as they are completely passive. That's also the case for real estate crowdfunding, because contrary to classical real estate where you have to take care about your properties, real estate crowdfunding is a way to invest in real estate without having to actually manage it. So that's why I also chose it in part as part of my portfolio. The third criteria that I use is that all the investments I'm making have to be accessible and manageable online. Okay, so I don't want to go to somebody to open an account, then to make a report. No, I want it to be all not only manageable, but all accessible online, even to start the investment. For example, this excludes classical real estate, where you have to go there to visit the house, then go to like a notary to actually sign all the papers. So this was excluded, for example, and this is why I chose, for example, real estate, crowdfunding, and REITs instead of classical real estate investing. Finally, the last point I want to mention here is that I chose my investments, I chose my assets so that they have a great return, okay? And I mean by great return, a great return compared to what is usually the typical advice when it comes to investing, okay? For example, when I sold my first apartment, because I was the owner of an apartment, my banker said that, yeah, I should actually put all the money into a savings account. And the return per year for this account was 0.5%, which is nothing and actually even lower than inflation. So actually by putting the money on this account, I would have lost money over time, not gained money. So that's why I'm looking for investments that I have a great return today, or at least a great return in a near future, like dividend paying stocks, for example, which will actually grow in return over time. So this is my fourth criteria. So this basically are all the criteria that I'm using when selecting assets, and this is why I chose the 3 different kind of assets that are currently in my portfolio. So those are dividend growth stocks, crowdfunding for real estate, and peer-to-peer lending. So if you want to learn more about this, you can of course visit my website. You will learn a lot more in detail about each of those asset classes. So to finish this video, I just want you to summarize what I told you. So the 4 criteria that I use to select in which assets I invest in are: 1, that they generate income; 2, that they are completely passive; 3, that they are accessible and manageable online; and 4, that they also make you a great return compared to inflation. So this is already the end of this video about how to actually select assets to invest in. I hope that you enjoyed it. As usual, if you have any comments or questions about this video, please leave them below. I also invite you to visit my website and to listen to my podcast to know more about investing and also to build online businesses. That being said, thank you again for watching this video, and I will see you in the next one.